welcome to Sectors Up Close. I'm Elena Casas. Our focus today is on the energy sector, and my guest is Amy Kong, CIO at Barrett Asset Management. Well, on Friday, both Exxon and Chevron booked record quarterly profits as soaring prices for natural gas and oil following Russia's invasion of Ukraine fuel enormous profits for energy firms. Exxon reported net income of $17.9 billion, while Chevron increased share buybacks after booking profits of $11.6 billion. Well, this is the S&P 500 Energy Index, up 38% year to date. It's the strongest sector in the market, but you can see there it's dipped since early June as global oil prices started to fall as soaring bills prompt customers to cut their energy use. Data last week showed a surprise fall in US gasoline demand at the height of the summer driving season, with analysts saying the price at the pump was putting Americans off travel. Also last week, we saw some surprise good news for the renewable energy sector. Senator Joe Manchin said he is prepared to back a $430 billion bill that would increase corporate taxes, invest in renewable energy, and lower the cost of prescription drugs. Democrats previously thought any climate action before the midterms was dead in the water after Manchin had refused to back the deal. Well, for more, I'm now joined by Amy Kong, CIO at Barrett Asset Management. Amy, hi, thanks for joining us. Now, as we were saying there, oil majors booked record profits this season, but they have been slipping back since early June when we saw a peak in the crude price. So have they already seen all of the upside of very high energy prices since the war in Ukraine?
Hi, Elena. Thanks for having me. I think you're absolutely spot on. A lot of these energy companies have been really benefiting from the oil prices being so high. To your point, whether or not the earnings have peaked, I don't necessarily think so, because whether oil is at 110 or 95, I think they are still operating well north of their break-even price. And in fact, that break-even price covers capital programs and dividends. And Exxon more recently announced that their break-even price is somewhere around $40. So I think the earnings profile for energy companies continue to remain strong. The earnings expectations is about 22% over the next 12 months. And I think the fact that oil prices are very, very much higher than their break-even price suggests that there's still some upside to go.
It's interesting, though, to talk about what they're doing with these record profits. We've heard, of course, about share buybacks. What we've heard a bit less about is investment, for example, in clean energy that would help future-proof the oil majors. Have they been disincentivized, do you think, by the higher prices from moving away from traditional energy? And does that affect your outlook?
Yeah, it's a great question, and it's very interesting to kind of analyze the dynamic of the energy sector right now. To my earlier comments, because the break-even prices have been moving lower now in the $37 to $40 range, there's plenty of cash flow that's quickly moving to the bottom line for these companies to either buy back more shares, which we're seeing. Dividend raises have also been apparent. And I think to your question about clean energy, we are seeing that there's more dollars allocated towards, again, clean energy and their climate portfolio, such that it helps to boost their image and also further diversify from the traditional oil. So I think the aspects that I've listed is all positive for the traditional oil players, and that's the kind of story, this capital return story, is likely to transpire further in the coming years.
So how would you advise investors to move beyond traditional oil going forward? Where do you see interesting areas in the energy space?
Absolutely. There are some very interesting research happening in the energy sector. I think, electric vehicles as well as solar and wind energy are probably more of the areas that capture headlines. But in between, there's a lot of interesting things happening in energy storage, which will include lithium batteries to hydrogen systems to energy distribution. Smart grids and such are, again, areas that we're starting to learn more and more about. I would say, as a common thread amongst a lot of these newer areas, is the fact that they are not quite profitable yet. Many of these companies are still in the early stages, and so they are very dependent on government incentives and tax credits in order to really stay alive and continue to push forward with their research.
And on that topic of government incentives and tax credits, could the bill that was agreed last week between Joe Manchin and Chuck Schumer be game-changing for clean energy if this moves forward?
I wouldn't necessarily call it game changing, although to your comments, there's a lot of incentives in the bill, which I think would be all positive for the clean energy arena, if you would. Lots of credits for electric vehicles, lots of, terms, if you would, for favorable loans and all of that. So again, I think it's all factored as positive, and you're starting to see the prices react favorably against that. But I don't think it's necessarily game changing. I think ultimately speaking, in terms of the profitability of some of these or the stock performance of some of these companies we've mentioned, it's correlated to tax credits, and so it's high now. But as these credits starts to expire, you start to see again the prices ebb and flow, and we've seen that correlation quite a bit over the past couple of decades.
Thanks so much for that insight, Amy Kong, CIO of Barrett Asset Management. Well, that's your roundup of the energy sector. I'm Elena Casas, and this is Reuters.